Guys, welcome to the Savvy Money Show with me, your host Sean. We are outside, so I apologise in advance for any background noise. Hopefully it's early in the morning, we won't have any. We're talking tanker stocks, and I realise it's been a while since I spoke about it. We're going to start with Ardmore. Now, this is interesting because we have had an approach for Ardmore from another company. Of course, it's been declined because they've offered them 30% below value for the shares, and traditionally when a takeover approach comes in, they offer 30% above. Of course, Ardmore have refused it, but yeah, I'm wondering if we're going to see a precedence with tanker stocks in the spotlight. You have them at a low, at a time when spot prices are so volatile they can jump up high. You know, you may get a few takeover bids coming for different companies, so this may be a bit promising for our shares if they do. Anyway, we go on to the next one, which is Euronav, ticker symbol EURN. Now, Euronav is a company that puts 80% of its profits back in dividends, and it has done. Of course, where its share prices dipped recently, they have done a share buyback scheme recently. They've bought back an amount, so if you're wondering why the shares have gone up, that's the reason why. They're a well managed company. They're the same company who earlier in the year, when the contango was going on, they sold a used tanker for more than the cost of a new tanker. So yeah, that's the kind of people you have at the helm. And to tell the truth, if you ask any institutional investor, it's the people at the top that what they look at first of all. They did it with Tesla and Elon Musk. They did it with Amazon and Jeff Bezos when both their companies appeared overvalued. We look at DHT. Now, they were criticised. I said DHT and Euronav originally, but DHT were criticised when companies were getting 100 to 300,000 a day spot rate, putting 5 of their tankers on a 1-year contract of 65,000 a day. Still left them with 23 tankers on a daily spot rate of 100 to 300,000 a day. Now, and don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. and if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. So, DHT made the right decision to put those 5 tankers on a 1-year contract, because while the spot rates have been recently between 14,000-20,000 a day, they're getting treble that for the rest of the year. And if another contango happens, they still have the other 23 VLCCs. You may have seen with NAT they had a little bump. Well, that is because their spot rate has gone up just a tiny bit, but it makes people think that their spot rate is going to continue going up. If you look at STNG, now Scorpio, it has one of the biggest clean tankers fleet there is, and it's a mix of different types of tankers. The problem for that is where they bought all new tankers, the debt to equity ratio isn't very good. But with clean tankers, you need clean tankers to transport gasoline and jet fuel and not processed fuel. The dirty tankers, which NAT have, they can't take those, because you know, they're dirty tankers. Once the fuel's processed, they can't handle it. And so NAT have put themselves out of that market. STNG can come in. Now Frontline, I spoke about before, and I came out of purely because they diluted their shares so much. And you see there, they went from 3 million shares to 4.5 million shares. Now their debt to equity has gone up as well. They're 1.5 times the debt to equity. You've got to remember, this is a company who had a good debt to equity. Look at that dividend, 36%. Looks good when you think about it, but it's like they was in a dividend war with NAT, trying to get NAT investors on their books, and it wasn't working. And you know, then they issued more shares to raise capital. It's a silly thing. Now, one who doesn't pay a dividend, TK Tankers. And why do I not mind them not paying a dividend? because if you're holding them long term, they're using the profits. Look at that, $133. When they announced they were stopping the dividend, then $14.50. That's ridiculous. But when they announced they were using the profits from this year to pay down the debt, you know what, I thought it's the right thing to do. If they don't pay down the debt, they're in trouble. If they carry on paying the dividend, they're in trouble. They'll go bankrupt. They stopped the dividend. They were proactive instead of reactive, and share price suffered. A lot of CEOs will think that's going to affect my bonus, that's going to affect my pay, so I don't care about the company. But these guys didn't. They cared more about the company, which I like to see. And although they're not the best one, I like that in a CEO, and I like the fact that that's what they've done and the way they've acted. I'm going to look into them again, and although they've been sideways throughout, you know, not much, just a jump here and there, I might look into them for long-term hold, purely on that basis. I know I'm not going to get a dividend on it, but I also know that if it comes back up again, I've got more chance of 10x in my money with this one. I've got more chance of 5x in my money with Scorpio than the others. The others I can 2x or 3x my money. But that's the thing with TK and Scorpio, there's higher risk than the others, but then the reward is there. But DHT and Euronav, you've got a constant reward in the dividend, and there's less risk. Now with NAT, you've got a risk and not as much reward, purely because they only have dirty tankers, they only have 23 of them, and they only have Suezmax, and they're hype stock that's already hyped, and when hype stock has been run up once, it's hard to get it to run up again. So that's my update on tankers. But then, saying that, as I said, with what happened with Ardmore, if you start having these companies going in wanting to take over the tanker stocks, any one of them could be a target. So I'd like to know your comments in the comment box below. It really does help with the YouTube algorithm. And don't forget to hit the like button. And I'll see you in the next video. Goodbye.